Hello, I'm Roselle with Farmer Brown Insurance Agency. We've put together this informative video for you. I hope you enjoy. Welcome to our tutorial on general liability insurance. So let's begin. What is liability insurance? General liability is a type of insurance policy that covers your business for a variety of third-party claims, including property damage and bodily injury. Anytime your business has dealings with the general public, whether it's with your commercial property or on a job site, you can be held responsible. That's why having the proper coverage on your GL policy is crucial. What type of coverage does general liability provide? The basic coverage of a commercial general liability policy we sell are as follows. General liability per occurrence with $1 million limit. This means the insurance company will pay up to $1 million per incident during the policy term. A general liability aggregate with $2 million limit. Now this refers to the limit scheduled with the insurance company to pay for multiple claims over the course of one policy term, which is usually 1 year. Advertising liability with $1 million limit. It covers damage to third parties committed by a business in the course of its advertising its products and services. Products and completed operations with $1 million limit. It covers liability arising out of the insured's products or business operations off premises once those operations have been completed or abandoned. And finally, we also offer damage to property of others with $50,000 limit and medical with $5,000 limit in case someone gets injured in a minor injury on the location. How is the price of the policy premium rated? There are different tiers of a policy. A business doing $1 million in revenue would buy a different policy than a small handyman working alone doing about $50,000 in revenue. Having this into consideration, a premium is generally priced in two different ways. Annual gross revenue. This policy is a cost per $1,000 of revenue based on your tax return. You start out paying a projected amount for the year, and after each year, you are audited by your insurance company. If your revenue is higher, you pay more. However, if your revenue is less, there is generally not any refunds. I know, insurance companies are not always fair, so you are best using a conservative amount. If you do more, you pay extra. The extra costs are not much as long as you are in somewhat of the same ballpark. Owner, employee, and subcontractors costs. This is the most common type of CGL policy. Your premium in this type of policy is based on a standard payroll for the owner, the cost of employees, and the cost of subcontractors. An employee does not need to have his own general liability insurance, but if a subcontractor does work for you, you would need to be in place in their certificate as an additional insured. It is very important to know that insurance companies treat uninsured subcontractors as employees because if he is at fault for a claim, your insurance company will be responsible for it. But if they have their own general liability insurance with you as an additional insured, you will have transferred your risk to your subcontractor's insurance. This is why the premium is much less, because there's less risk for your insurance company this way. So, as we already established before, general liability coverage are intended to protect you against third parties. Join us in our next video where we will explain about the type of policies and the type of companies you should get it from. Just click the link below and don't miss out on this great opportunity to learn more. Thank you for watching us, and remember, we'd love to do business with you at a great price. So give me a call for a quote at 773-657-2600. I look forward to speaking with you.